Welcome back to Trading 360. I'm Nicole Petalidis, live on the floor of the New York Stock Exchange. Glad you're with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Good morning to you both. Good Friday morning. I know Super Microcomputer is your first name up today, Joe, but just big pictures. We're wrapping up somewhat of a volatile week and a lot of economic data too.
Yeah, it's been a volatile week. This actually is true to form. The middle of February, we start to see some volatility, especially after the options expiration, which is today. So we're looking for some more volatility next week. And March, believe it or not, is the most volatile month of the year. So it's no surprise coming off these low levels in volatilities. We have the VIX, at a 12 area up to where it was on Tuesday at 18. It's no surprise to see this rise in volatility. Seasonality, this just is true to form.
All right, so right now we're going to talk about SMCI, which has been incredible, ran up to new highs of 1,077 year to date, up 221%. What are you thinking here with a name that has run so hot?
Yeah, so this is bringing me back to like the 2020 meme stock days. We had these just crazy squeezes higher, a lot of attention paid to it. People just paying up for upside calls and just being rewarded for it as it kept on going up and up and up and up. Now, at some point, it just becomes too much and it has to pull back. And for me, I want to watch this, let it pull back a little bit more. But the excitement is there, and the excitement could be warranted. The one theme that's been constant in this earnings season, which has been mostly good, but all of the companies are talking about AI, and they're not quite profiting off of AI yet, but they're talking about their spending on AI. What does that mean? Well, they're buying computer chips, they're buying processors, they're buying data centers. NVIDIA has been the one that's on everybody's mind that's benefiting from it, but there's also other companies, MSCI right there, comes to mind, people benefiting from this new AI craze. I expect that to continue. I expect them to maybe not catch up to NVIDIA, but at least follow in their coattails. It makes sense for this excitement here. It's just a little bit too much too fast. If I were to be owning the stock right now, it'd be a good opportunity to own married put, own my stock with some protection on the downside. But when it does pull back like today, I'll be looking at upside again, looking at these calls. For me, the way to play it is with options, with calls, to find risk and know what I'm throwing out there, because on a day like today, we can just drop 10%. Not much has changed between today and yesterday other than the price.
All right, Ben, I'd love for you to take a look at this wow of a chart.
Yeah, I think Joe is right in many ways, right? He said a little bit too much too fast. He talked about how this stock has been parabolic to the upside here, and sustainability comes into question whenever you see a big move like this. So a pullback right now in many ways, although it doesn't seem like it, right? The significant move lower we've seen, possibly just what the bulls are looking for. So let's take a look here. First and foremost, at some of the price activity. And I want to begin with a very granular look at the 5-minute time frame, because this is where we've seen some of the more parabolic recent activity kind of come to a head. But you can also see two pretty well-defined phases of development. You got the market, which kind of pauses and then kind of rallies up. And even right in here, you can see these 3 little areas where the market kind of consolidated and then just wipes it out. So the untrained eye maybe sees 2 moves here, but there's really just 1 move. You get the high conviction trend to the upside, and then it's invalidated. That's it. So this does not necessarily dictate a sell signal by any means. And in fact, in many ways, a pullback could be healthy, right? Take a look, because, well, it certainly was and has been in the past. Let's just build a little time onto this chart here and go back to when the stock was trading, well, down around 300. A rally up since throughout this year that we've seen higher highs, higher lows, well-defined areas of value forming at higher and higher levels. And then this big move again, as we just looked at, up and through this $800 level when the stock really started advancing here. So we're just pulling back to a significant area, possibly just forming a bit of a range if we could get something a little bit overlapping and a bit more rotational. Now, here you can see, look at this. I mean, really speaks to the parabolic aspect of this. But as you look at, well, first and foremost, this chart, you can see the high conviction associated with this recent trade up. The red candle stands out. But also look at this, because throughout the period that we were seeing, again, March, April, May of last year into the end of July, this stock spiked up, and then we saw a significant pullback in this period. We're talking 30-40%. ended up going sideways, and look at this, resume the trend to the upside. So the argument being here, a consolidation area, an area where we start to get a little bit more overlapping and rotational, could be, again, exactly what the bulls are looking for. Yeah, the pullback here, not necessarily something to cheer on into the weekend, but if you're talking about a longer term play, you want to see value established at this upper level, not a V-top.
And so, are you seeing what you're hoping to see, Joe, now at this point?
I want to watch it for a little while longer, but I do have to say the options prices, they're extremely high, but I still think they're kind of cheap. Maybe that's due to the 3-day weekend coming up. For me, watching this with options, playing with it options is going to be critical. Again, owning stock here, I would need to have a married put to be with it. And if I'm going to get into this stock, it's going to be with calls.
All right. Next up, Apple. Not so magnificent in the Magnificent Seven. Your thoughts there?
Yeah, we're not quite we're not doing as good as the rest of the market this year, to say the least, in Apple. And I'm kind of watching it right here. I think I'm concerned to the downside. This is almost like a protection for the rest of my portfolio. I talked about how the end of February into March the market gets volatile. I'm worried about March for Apple specifically, and I'd like to protect my portfolio by buying the 180 put in Apple, having that downside protection. I know. If Apple goes down, the market's going to be going down with it. It's making some lower highs, and I'm just concerned about the health of this stock, given everything that's going on there, mostly, of course, associated with these higher rates.
Right, understood. Tell me about your thoughts on Apple today. This one you've taken a look at a lot of times here, Ben.
Yeah, we have, and it has come under pressure here recently, but I think the longer-term trend is still to the upside here. Let me just break down a 5-minute candle chart here, first and foremost, and some of the price activity we've seen this week. Not what the bulls were looking for, that's for sure. We actually sold off. Stock was trading up around 190, if you remember, to begin the week. The most of the conviction happened Monday to begin the week, and you can see since we've been a bit more sideways, hanging out right around a key pivot level. We'll call it 184 for now, 185, depending on how you look at it. But here you can see on this chart, again, the sideways, the left side of the screen, where you get that high conviction to the downside to begin the week, and then Tuesday, Wednesday, Thursday into today, we're a bit more sideways. We've got a well-defined upper extreme here. We'll call it 186.50, 187 to the upside, and 181 to the downside here. This is a bit of a bearish pattern playing out, but longer-term trend has been and continues to be the upside. I mentioned 184 is a significant area, and here's why I think, because look at this. This range that we've been in goes all the way back to, we're talking May, end of April, beginning of May last year. Still in an uptrend, value moving higher, a couple tests of key areas that were established at lower levels, but for the most part, this broader base range continues to remain intact with well-defined upper and lower extremes. Again, 170 we'll call it, and 199, 200. Another step back here, because speaking of a bullish pattern playing out, just adding more time onto this discussion here, and you can see going all the way back to the spring of 2018 into 2019, we were trading around 50, and look at this, areas of value that continue to form at higher and higher levels. Again, mentioned 184 being very significant. If you're trading this long term, you don't want to see it below 155. You're looking for a breakout above this 199 level, a bit of a double top where the market stalled out a couple times, and then you want to see value form at that upper level, exactly what we were talking about in terms of SMCI, right? You want to get that breakout conviction to the upside in continuation of the pattern, trend up, and then establish that new area of value acceptance at that upper level.
Yeah, understood. And so, with that, I'm also wondering if at any point we'll get an AI update, because, the shareholders have been pushing and want to hear more about AI tools that Apple's been doing, especially the ones that could rival Microsoft's GitHub Copilot. And so people are waiting for more news on that. In the meantime, 183 is where we are here. Final thoughts, Joe, on this one?
Yeah, this is more just a broad concern of the market. I do agree. We've had tremendous run for the past couple of years in Apple, but if you look at broadly technology, they've had a huge outperformance to the rest of the market. So I think if there is going to be a little bit of concern, if we do start to see a little bit of a credit crisis, Apple Apple will be on the chopping block. People need to take some profits there. I'm worried about the downside broadly. If we don't, that's great, but I want the protection on just in case for the next 4 weeks.
Yeah. Next up, Google. What do you think about Google? NVIDIA surpassed Google in its market cap, right? Tell me about Google.
Google, for me, a chart looking very similar to Apple. Similar story for me, similar setup. I'm worried, Google, very dependent on advertising, very dependent on the strength of the consumer. So I'm worried about what they might be saying for the next couple of weeks. Again, this is all about a March play. It's all about market softness and weakness in March. Portfolio protection, looking to the downside here in Google, worried about the 140 area breaching there. So I'll be looking at the 140 puts in Google, having some downside protection on just in case of some event happening in the next couple weeks.
Okay, your turn. Ben, you're up. I'd love to hear the technicals on this one.
Yeah, Nicole, Joel's right. A very similar setup. Short-term weakness, longer-term bull pattern, which to me says that the bulls are still in charge here. So let's just break it down. First and foremost, 5-minute candle chart, and you can see some of the selling that's come into play recent. You can also see some of the areas of value that moved at lower and lower levels from 150 down to 140, currently consolidating, holding around 143. So let's take a step back because this is a very bearish pattern playing out. But if you take a step and look at this longer term chart here, you're going to see a bullish pattern, right? With value that's moving to the upside, going all the way back to, we're talking June of last year. Earnings have helped this stock again continue to the upside here and regain composure during times of doubt, right, and uncertainty in the broader market. One more step back into a longer term daily candle chart. Now we're looking all the way back at March of last year. In this instance, stock was trading down around 100. You can see shares of Alphabet have and continue to see value move at higher and higher levels. We're balancing around 145. Bulls want to see us take out 154, form a new area of value at a higher level. They don't want to see us take out 130. But as of right now, no indication that the bears are not in charge here. Could be some range-bound type trade within this area around 143, but looks to me like a trend up here still.
Yeah, all right. Thank you for that, Ben. And last up, you get the last word on this one, Joe.
Yeah, I hope that's the case, that we're still in an uptrend broadly in the market. I think a pullback of 3-4% in tech stocks is possible, and we could still be in this uptrend rally here. Again, March, I'm concerned about that. It happened last year around March. Interest rates rose. We had regional banks having a crisis. This year, will the catalyst be corporate real estate? Will it be China? I'm not sure, but higher interest rates tends to break things. I'm worried about something breaking, causing a little bit of a credit crisis, which will be unwound after March.
All right, Joe Tigay, great to see you, and Ben Lichtenstein as well. Thank you both for the big three today. We had SMCI, Apple, Google, a great big three. Thanks.